Welcome to my $100,000 stock experiment, Sell Rules, week number 37, week ending December 21st, 2018. I'm sharing my stock journey as I practice and develop my sell rules. This isn't an endorsement to purchase any stocks that I've bought, nor is it an endorsement to purchase stocks in general. The market direction is market incorrection, which basically means don't buy. You might ask what I mean by market incorrection. This is a one-year chart for the S&P 500, and you can see that black diagonal line is the 200-day moving average, and over at number 4, we're now way below that 200-day moving average. Earlier this year, there had only been 3 short points in time where this index had fallen below that 200-day moving average. And even if you look at the Dow Jones average or the NASDAQ, they all have had very few periods earlier this year underneath the 200-day moving average, and now we have many, many days. NASDAQ did not quite hit the 200-day moving average back at 1 and 2, but it is definitely below the 200-day moving average. You can also see in box number 4 that the price action is not very wide. Those bars are short and tight. And number 5, big swings in the price. And you can also see that in what's called the volatility index. So we're up to 36 on December 24th. I took this today. And you really want the VIX to be down under 18, 17, somewhere in that area. I marked up this Dow Industrial Average chart with the IBDs when the market was confirmed uptrend, the green, and the uptrend under pressure is the yellow, and market incorrection is the red. So this is my, I'm going to try and explain to you how you can watch for the bottom of this stock market decline, and when the IBD will tell you that you should start buying again. The easiest way to do this is just subscribe to the IBD and read it, and they'll tell you when the market goes back into a confirmed uptrend. The IBD follows the chart and watches the lows and then looks for when stocks start to go back up. And it has something called the rally day and the follow through day. So a rally day is your first up day after the downtrend, and there's a lot of technicalities that it has to be a certain amount of volume, and I'm not going to get into all of those. I just want to show you the basis process of how to count the rally day and the follow through days, and then when that fails. And the past couple of months it failed a couple of times, so this will be a good example to use. I'm going to start at number 1, where the stock market, the Dow Industrial Average, had closed below the 50-day moving average. This is on October 10th. I drew a red line at the low for that day, which is where you start your measurements from. As long as the stock closes above that, then you don't need to move that bar down. But if the stock market the next day closes below that line, then you keep moving that bar down as your bottom line measurement. The next day, the stock market fell again, so that low line got moved down. And the day after that, the stock market closed up. It's a green day. That's your rally day. The first day where you can start counting your upward trend. There were 2 up days, and then there were 4 days lower than that previous low. So we had to move that red line down. And then you can start counting your rally day. And then from that, you count the 4 up days. And then after those 4 up days, that is the market turned into confirmed uptrend. So that was your follow through day. The market started to fall again at number 2 and then came up a little bit at number 3, and it did send the market into correction at number 4. but the lows never undercut that prior low. So you can start recounting your up days. Your rally day there is with the R, and then you have the 4 up days, and then your follow through day. And at number 6, this um, on the follow through day, this went into a confirmed uptrend. And as you can see, it fell apart again. The stock market is still falling, so we're going to need to move that red line down, and we're going to need to start watching for a rally day and follow through days. Hopefully the next time the market goes into a confirmed uptrend, it will stick and not fall apart like the last 2 attempts have. The basic premise of my stock experiment is I started April 13, 2018. I have $100,000 to invest. My goal is to double my money in a year. My focus is on practicing and developing my sell rules. I'm trying to learn and implement the CanSlim style of investing with growth stocks. And I'm trading in my rollover Roth IRA. I have free trades and I don't have any tax implications. My basic sell rules are to minimize my losses by setting a stop limit order at the floor at the time of purchase. Initially, my floor is 8% below the purchase price, but as the market conditions either go into correction or under pressure, or if my stocks go up, then I move those to either a violation of the 20-day moving average or just up to the 20-day or 50-day moving average, depending on what the market's doing at the time. I hold stocks that are going sideways for 4 to 6 weeks, and I like my stocks to be gaining a minimum of 0.5% a week. I also look at stocks that I've sold for any repurchase opportunities. I did sell 4 stocks week number 37. 2 of them triggered the stop limit order, and 2 of them I did not set my stop limit order, so I took a larger loss than what I had, what I would have liked. This is ugly. Stock symbol BEAT. I purchased it on December 12th, and I did not set my stop limit order when I purchased it at the 8% loss. And by the time I got in to set that a couple of days later, the stock was already below that floor and the market was behaving badly. And I wanted to just give it a chance to see if the market settled down. So I put my limit order at the 50-day moving average, and the market did not settle down, and it did trigger that sell rule later that day. So I took a 12% loss for $1,259. Ouch. The trade desk followed the same pattern. I had not set my stop loss limit, and so when I logged in, I put that at the 50-day moving average. It triggered later that day, and I again lost 12%, $1,243. Coca-Cola European Partners, I had held this stock for 5 weeks. I took a loss of 3% for $344. I had raised my floor. The original floor is in the yellow, and the dash red line is where I sold it, where I had moved my floor up, which was basically at the 50-day moving average. I also sold Americold Realty Trust for a loss of 5%. I had had that stock for 21 days and I lost $485. That leaves my portfolio with one stock, KL, Kirkland Lake Gold, and it is up about 4% from last week. Here's a 6-month chart for KL, the only stock in my portfolio, and it is up 4% in 10 days. I am going to raise my floor up to where that dash yellow line is. And I picked that because I do a 10-cent range on my stop limit order. So my low level is at 23.09, which is the 20-day exponential moving average of this stock right now. And then the high end is 23.19. So if the stock falls below those 2 points, then it will automatically trigger a sell. And that 21.19 is right through the middle of that number 1 area, which is the beginning of the cup pattern that this stock formed, that cup pattern when I purchased it. So I think that's a good area to put my floor. The benchmark is showing that I lost another about $1,400 this week. My portfolio is now at 112,845, so up 12% since I started in April, and definitely better than what the S&P is doing, which is now down to 90,975. The red line is my target if I'm going to make my 200,000, which now I'm beginning to wonder if I'll be able to double my money by April. So I'm setting a new target range between $140,000 and $150,000, where that gray bar is. So given that the market is not performing well right now, I'm going to shoot for that lower level. So I looked at my weekly loss versus my sold stocks, and I'm like, how did I only lose $1,400 when my sold stocks were down $3,330? And the answer is that some of those losses were already counted in last week. So number 1 is what I sold my stocks for this week, the loss of $3,330. But last week those stocks already had a loss built in of $1,354. So if I subtract that, I come up with the difference of $1,976. I add in my gain on week 37 of KL and my dividend, and now my loss for the week is $1,467, which I confirm number 4 when I look at the benchmark of week 36 and week 37 and subtract those, I come up with the same amount. This is my transaction and cash balance. At the end of week 37, I have $102,474 in cash, and I own 1 stock. My investment goals for the week are: 1, I'm going to develop a watch list. 2, I'm going to watch the market every day, and I'm going to be looking for that rally day and that follow through day that I described earlier in this series. Once I get a confirmed uptrend, I'm going to buy at least 1 stock and sort of test out the market and hope that confirmed uptrend holds. And then lastly, I'm going to start to develop my buy rules. Since I don't have many stocks to track right now, I want to develop some solid buy rules. The first 2 items in my buy rule are: number 1, to buy when the market is in confirmed uptrend. I think I've proven to myself that when it's uptrend under pressure, that most of the things I'm buying are not making sense. So I'm going to start only buying when market is in confirmed uptrend. And number 2, I'm only going to buy when I have time to document my purchase and set my stop loss, which got me into trouble this week, not setting that stop loss. Thanks for watching. Keep an eye out for my next episode, or better yet, subscribe to my channel. Don't forget to hit the bell if you want alerts when I post a new episode.